S&P 500 and Nasdaq hit record highs. Consumer strength drives market. The S&P 500 and Nasdaq composite have reached unprecedented heights, signaling a robust consumer market backed by strong economic indicators and corporate earnings. Summary of key developments. The S&P 500 has achieved its sixth record high since June 27th. The Nasdaq has recorded 6 of its best finishes in the last 7 trading sessions. Semiconductor stocks surged following TSMC's impressive quarterly profits. Companies like PepsiCo and United Airlines saw their stock prices rise due to positive forecasts. Overall, the indexes showed gains. Dow up 0.52%, S&P 500 up 0.54%, and Nasdaq up 0.74%. On July 17, 2025, both the S&P 500 and Nasdaq composite closed at all-time highs, as investors reacted positively to encouraging economic data and earnings reports that indicated American consumers are still eager to spend. The Nasdaq has now hit record highs in 6 of the last 7 sessions, while the S&P 500 has also seen 6 of its best finishes since late June. The Nasdaq composite rose by 153.78 points, or 0.74%, reaching 20,884.27, while the S&P 500 increased by 33.66 points, or 0.54%, to settle at 6,297.36. The Dow Jones Industrial Average also saw a rise, climbing 229.71 points, or 0.52%, to 44,484.49. Wall Street has experienced a significant rebound since the downturn following President Donald Trump's tariff announcements in early April. This week was particularly crucial, serving as a test for the market's recovery, with several key economic reports and the commencement of the second quarter earnings season. According to Anthony Saglambine, chief market strategist at Ameriprise Financial, the economic data and corporate earnings are indicating a solid economic environment, allowing markets to steadily rise this week with supportive data. Recent data revealed a sharp rebound in U.S. retail sales for June, suggesting renewed economic momentum and consumer confidence, despite mixed inflation signals showing stagnant producer prices alongside a rise in consumer inflation. Investors are closely monitoring the effects of Trump's tariff policies on the U.S. economy. The Federal Reserve has signaled that it will refrain from cutting interest rates until it can assess the inflationary effects of increased import taxes. This sentiment was echoed by Fed Governor Adriana Kugler, who stated that rate cuts are currently on hold as the tariffs begin to influence consumer prices. Currently, traders estimate a 54% chance of a rate cut in September, with a July cut nearly ruled out, according to CME's FedWatch tool. In addition to strong retail sales, positive commentary from consumer-oriented American companies has contributed to market optimism. PepsiCo's stock surged by 7.5% after the company projected favorable results, driven by increased demand for energy drinks and healthier soda options, which helped alleviate concerns regarding a potential decline in annual core profits. United Airlines also saw a 3.1% increase in its stock price after forecasting stronger demand since early July, providing a rare positive outlook for an industry facing challenges due to budget cuts and trade tensions. Competitors Delta and American Airlines also experienced gains of over 1.4%. The technology sector, particularly U.S. chip makers, benefited from TSMC's record quarterly profit announcement, which highlighted a growing demand for artificial intelligence. TSMC's U.S.-listed shares rose by 3.4%, while Marvel and NVIDIA saw increases of 1.6% and 1%, respectively. Saglambine noted that TSMC's outstanding earnings are a positive sign for chip makers and the broader technology sector. He emphasized that the strong demand for AI chips sets a favorable stage for upcoming earnings reports from major tech companies. Both the technology and industrial sectors reached record highs on Thursday, with financials leading the way with a 0.9% increase. Netflix's stock climbed by 1.9% after reporting earnings that exceeded expectations, bolstered by the success of the final season of the global hit Squid Game. This market performance raises intriguing questions. Are we witnessing a sustainable economic recovery, or are we on the brink of another downturn? What are your thoughts on the impact of tariffs on consumer prices? Join the conversation in the comments below.